Hey, good morning, everybody. This is Mike with smartoptiontrading.com, where you can catch me on Twitter at OptionsMike. And here giving you guys another update on the market and some ideas and things I'm looking at here as we move forward into a new week. It is Tuesday morning, March 9th, and this is being shot before the market opens. So if you bring up a chart of the S&P 500, the first thing you're going to notice is that everything is not equal here. And what I mean by that is there's some names and some sectors that are greatly outperforming and others that are just getting hammered and greatly underperforming. When you look at the S&P 500, it's actually holding up better than some of the other areas. We've been pulling steadily back. You can see that red line here showing the downtrend. We came right up to it yesterday and failed there again, telling us that right now we're still in a downtrend. The market's still in a weaker phase. A lot of this has to do with what's going on with the interest rates. Bonds keep selling off. Interest rates, specifically the 10-year Treasury, keeps going up. And that's got investors worried and the market's worried about inflation rearing its ugly head. Now, do I think that's going to happen? I think we're a little bit away from that yet. I think this is ultimately going to end up reversing and heading back the other direction. But for now, everybody's worried. You should watch tomorrow's in the United States, the 10-year Treasury auction to see how that goes. That'll give us a good clue what's going on. But for now, the S&P 500 is in a weak phase. It's clinging to the 50-day moving average, which is the purple line. You can see the two blue arrows there. And if we cannot hold here, you look for a move potentially down to the 355 zone, which would be about a 10% pullback or correction in this market. Outside of that, you want to see what else is going on. It's really what we call a stock picker's market. And it's about the right names on the right day and playing with them. If you look at the chart of the diamonds, the DIA, that's the Dow, the Dow components, 30 symbols, and these are up big. In fact, yesterday, while the market was weak, the Dow put in an all-time high, right? This was led by the names like GE or MasterCard. Disney put a new all-time high in yesterday as well. So we're seeing a lot of strength in the industrials, specifically in some of these Dow components. Again, pointing out not the entire market's not exactly equal. What isn't doing well is the next chart. And that's the QQQs, technology. And tech is getting killed. When interest rates go up, tech tends to get hurt because they're growth stocks. And growth always gets concerned when interest rates go up. When we start seeing inflation going up, everybody gets concerned about growth. Now, on the Qs, we pointed this out last week. We've already had our 10% correction in the Qs. And, the next spot on here, if this wants to go lower, it looks like that green line. That's the 200-day moving average, which is currently set up just under the 285 area. Notice it's still moving up. This is a good sign, but the Qs remain weak. They cannot get above the 8-day moving average. And if you look under the covers on the Qs, there's a lot of names that are getting hurt a lot worse than we see here. Apple's almost at the 200-day. We're seeing Tesla almost back to the 200-day. And the next chart we're going to talk about actually breached the 200-day, and it's been one of the stronger names since the lows of last March. It was one of the leaders coming out of this. So when you look what's going on in the markets and you take a look at NVDA and the semis, and I'm using NVIDIA as my proxy for the semis, this has been one of the best companies. It had a great report. If you look at their earnings report last week, fabulous report, great earnings, great guidance, and they're selling off. And this stock is now sold from over 610 all the way down to closing at 463 yesterday. Notice we've been taking out levels. We took out the uptrend that we had. We've taken out the 200-day. We took out the support area down here. And now you start looking at that 450 area. If that 450 area can't hold, this stock could be in some pain. That said, you look at RSI, it's saying it's oversold. So likely we get some type of bounce here in the short term. Is it going to be a bounce that can hold? I don't know. But right now it's in an interesting area. And if rates continue to decline, we see interest rates start coming back down, I would look for NVIDIA to bounce and maybe as high as 542, which would be the next big area to watch. So for now, you have to be patient. If you're a long-term investor, maybe start nibbling on some of the names that you like in the tech industry, names like Apple, Microsoft, NVIDIA, strong names. Keep some of the value names in play like GM and Ford and GE, and really just be nimble with your portfolio. Have lots of cash available, and we'll see where we go. Catch you guys next week. Hope everybody's doing great. This is Mike with smartoptiontrading.com.